Michael here from Storehouse Analytics. Welcome to the Storehouse. Today is the 19th of June 2016 and I'm bringing you some new content today, reviewing some of the trades that me and the guys in the group have taken. It's been a busy couple of weeks. I know I haven't posted a video in the last couple of weeks because it's just been so busy in the markets and also privately as well. So I thought I'd release some new content for you, just going over some market analysis and showing you some trades, and also giving you an update on the webinar that I promised you all. Okay, so as always, we start with the disclaimer. Remember, trading is risky. Please, for your sake, for your family's sake, do not trade with money you can't afford to lose. You don't want to lose your shirt. Do your due diligence, pause the video, read the disclaimer, and stay safe. Okay, we're going to go straight into it because I don't want to make the video too long. I'm going to do a top-down analysis of a potential trade coming up possibly very soon as maybe tomorrow, tonight when the markets open, tonight my time. And it's going to be on the Aussie CAD. I've gone ahead and annotated at least the biggest time frame I look at to speed up the process. So as always, we start from the biggest time frame, the monthly time frame. In my case, for other people, it may be the weekly, it may be the daily, depending on what kind of trader that you are. So analyzing this pair, firstly, we found this supply zone because of the move away from it, taking out all of these levels here. And then we also found this demand zone because it was the demand zone that removed this trend line. I hope that is clear. This is no longer fresh, obviously, because price has hit it since we drew it in. But because of the very shallow penetration, I've still left it on there. The actual fresh level is this one, which is why I left it to show you that when we're looking at curve, we look for fresh levels above. So this is the current range. We've said that price is in consolidation, but I think this is an old annotation, so please ignore that. In fact, I'll take it out so it doesn't confuse anyone. It might still be correct, but we're not looking at a trend right now. What we are identifying is we've identified demand below which price reached last month, and it's still in that area. So price is very low right now. In fact, it's too low, in our opinion, to be shorting. And we have fresh supply above. So if we can get long anywhere down in here, the ultimate target, I'm not saying the only target, I'm saying the ultimate target will be just before this fresh supply zone. We still have this to get through because, as I said earlier, it's not really penetrated it too much, but it's very likely that as we go back up, we will form new levels that will be closer to this one, in anticipation of this being broken. But for now, fresh supply above. Demand has been hit, so we're low on the curve. We want to be looking definitely not to be shorting, number one. If we were short already from this area, we're definitely looking, if we haven't already, to exit those short positions. And we want to start looking for demand zones on the entry time frame to get long. We're not interested in the trend at the moment because of where we are in the range curve. The trend is going to be down anyway because of all this move. If you go down to a weekly chart, for example, Let's just do that to show you. We know that the trend will, there you go, the trend will be down on the weekly chart. It's a pointless exercise going down to the weekly looking at trend because we know it'll be down. And look at here, this is where we are right now. This is a weekly demand zone embedded inside our bigger monthly demand zone. If we change it back to the monthly, there you see it. So that's why price is, but we knew that we want to be buying around this area anyway. So if we go next to ignoring this weekly, which is what we just saw, if we now go to our entry time frame, so we know we're low on the curve, we're looking for entries, and we find this area. Let me just blow that up for you. So we find this area, which is a rally-based rally. This area, even though it's low on the curve, should not be used for set and forget entries, and I'll tell you why in a bit. But this area is demand. Why? There are only two things that qualify a zone to be demand or supply. Either the zone takes out an opposing level, or it is the zone that is responsible for the break of a trend line. Now in this case, because we're evaluating demand, we want to ask, this zone, for you to qualify as a demand zone, what have you done? What have you achieved? What did you take out, whether a trend line or an opposing zone? Now, if you look left, you will see this zone was the supply zone that was holding down price. Let me just draw that in for you. That zone, you'll see when it was created, price fell away, came back to it once, twice, fell away even further, made a lower low, came back to it, fell down, couldn't get below this low, and this was demand because it took out a descending trend line, which we've traded off of this in the last few days, because we were low on the curve on this for this is for the day traders. This would be their biggest time frame. So that was a demand zone. Price didn't make it back to it. This is how I would draw the zone anyway, but price didn't make it back. But what did it do? It gathered enough strength to take out all of this supply. You'll see it's punched through it. It's now come up into this not so well defined supply zone, but a supply zone nonetheless because of the fall away. So this is the rally, the base, and the drop. The rally, the base, and the drop away. Price is now reacting to that. But what it has done, as I explained on the monthly chart, it has created a zone just below this area that is likely to be responsible for the break of this area as this market is going into a turn. Okay, now what is interesting also, I was pointing this out to one of the mentoring students, is if you look at this, a lot of our friends who trade traditional patterns will be eyeing this because they see this. They see that. Look at that. That's inverse head and shoulders, as the people who trade patterns see it. They're not long yet because we've only had a penetration through. Some people who are aggressive may have taken this long and they're sitting through some heat right now. But we're looking to get long using confirmation in this area. Why? Because the move away is great, but it's not meeting the minimum requirement of at least a 2-to-1 move away from the zone. So by that I mean that the move away from the zone must be at least 2 times the size of the zone. So this distance from the proximal to the distal line, that distance must be represented 2 times. So we have, what do we have here? We have, say 900. We're looking for at least a move up to 1800. So about there. It must get to there for us to be comfortable taking a set and forget in this zone. Because it hasn't moved up to there, we can only wait for price to pull back into this zone, and then we look for a confirmation trade inside this zone. That will help our profit margins, because we're going to be looking at potentially this area or just before this area for our exits. So we're going to be maximizing our profit potential that way. Okay, so that's the top-down analysis for the Aussie CAD. Looking inside here for the possibility of a long. It may come, it may not. Can't believe I just left a chart pattern on my charts. Disgraceful, Michael. No, I'm kidding. There are people who make money trading chart patterns, people. It's not about one system being better than the other. No way. It's about what works for you, what your eyes see. Yeah, and what risk levels you can manage. For me, I only see zones pretty much all the time. So, waiting for confirmation in here. It's because it's so close, you may get a gap down into this on Sunday, or you may have price travel into it and then base a bit in here and then go up. So that's the top-down analysis on the Aussie CAD. To summarize, the reason we're looking for longs is price is low on the curve. We're looking for longs. We're not allowed to short anymore because of how low we are in the range. We want to look for the possibility of longs. We're not interested in the trend because we know it's too low and the trend will be down anyway. But we're not saying, the trend is down, I want to be selling. Why not? Because it's too low. Price has gone down too far on the curve for us to be selling. We want to be selling high and buying low, not selling because the trend is down. That's where we differ in the way that we look at trend in supply and demand trading. Okay, so we go to our entry time frame and we located this area, which is the area that removed this supply. So that's why we're waiting for this. Okay, quickly moving on, just to show you a quick trade that we took in our group. We have a group now that we, for the mentoring students, where we exchange ideas, and we call this in the group last week, and people, one of the trades that were called that people made good money on. Again, using the day trader time frames, we found these levels, these level on top of level. This was the extreme, the chart was like so. When we found it, I think it was about like that when this zone was identified, and we said, right, price is reacting off of daily supply. The day traders have started shorting because we can see that some of my guys took the shorts up in here as well for day trades, and it was coming down. We identified these two levels as levels on top of levels, and we said this is the area where we would be allowed to look for longs. So price reached there with the FOMC palaver and all of that, and we started to look. So we found these two areas. Again, a level on top of a level inside a level on top of a level. This is a 4-hour chart, so going down from the daily to a 4-hour, and we identified these two levels. I took the short. As you know, when I have a level on top of level, one of the ways that you can trade these is just to wait for the lower level. In the case of demand, if it was a supply on top of supply, you would wait for the upper level. Another way is to leverage your way into the position. So I took shorts down in here, and we took it all the way up to this area. Why did we choose this area as our potential exit area? Because of the move away. It's not supply, but it was definitely a selling area, because you can see that when price was last here, what happened? We had a ginormous drop. This is the kind of drop, another set of falling knives that we want to catch. We love falling knives. The only way price will become low for us to be interested to buy is when bad news comes out, or the market perceives some piece of news as bad and people exit. We want to be buying from those people exiting, and we want to be selling from those people who hear a piece of good news and are looking to just continue buying. And what they many times unfortunately don't realize is that they're buying into a supply zone where we want to be selling to them. So we took this long, and we exited it up in here. So virtually everyone in my group this week made money, however large or small. Some made huge amounts, some made reasonable amounts, some made small amounts, all depending on their risk profiles. So that it's been a good couple of weeks, I think, in the group so far. So well done to everyone. Just so people don't think that we're fibbing or telling fibs, this is me on Forex Factory, and just showing some of the trades that we posted out there. So these are some of the examples that I've posted in there, and even some of the trades. Like this was off of the FOMC. This was the Aussie dollar that we traded. This was a 60-minute buy into a 60-minute zone. You see the entry there, and these were the take profit targets that were hit. Exited the last position, stopped out on the trailing stop there. So it is true. It's what is possible, everyone. It's what's possible with hard work and someone to hold your hand and support, and you being able to ask questions on the thread, for example. Obviously, because of the mentoring students, I can answer as many questions. It's fine, but there will be stuff that I will not be able to give on the thread. I give pretty much a lot on the thread to people, and I'm glad to do that. So that's it really. Regarding the webinar that I spoke about, we have the email address. This is how to contact me if anyone was interested in taking up the idea of mentoring. I'm not going to go much into that, but if you wanted to talk to me about it, that's the details. But for the webinar, I would kindly ask that people send their questions, and I know there are many. I've got tons and tons of questions I've answered via email since I started this channel, and it's been fantastic. And this webinar is going to be again looking at the questions that people continue to have as the thread has grown, as the channel is growing. We're up to, I think, 129 subscribers now. So please send your questions for the webinar, which will be in July. I'm thinking either by the end of this month or early July. I'm going to do it, specifically tailoring it to answering questions about the methodology, how to use it, what are the potential pitfalls that you need to be aware of, so that when you go in, you are able to use it effectively. What are the advantages of the methodology and all of that. So send your questions, people, to storehousewebinars@gmail.com. It's all one word, all lowercase, storehousewebinars@gmail.com. Okay, that's me done. Thank you, everybody. I hope the video is not too long. But that's it. I will see you again very, very soon. We're going to continue with the content on here. Thank you to everyone who's subscribed. Thank you for sharing the videos with your family, with your friends, inviting them onto the chat. the Forex Factory thread. Thank you very much, and I will see you again soon. Remember, they're protective stop losses. Use them, please. AKT out.